All right, hi everyone. Welcome to Q&A Market Prep with me, ABJ, here in Quant Data. So we run these every Wednesdays and Sundays around 5 p.m. PST, and this is just your time to ask questions, and it's time for us to recap some of the trades, recap today, recap some of the important events that have happened, and then we also talk about the future. We talk about what's coming up, what to look out for. How long is Carmen around for? That's the first question here. She's back Sunday, so plenty of lonely days left. What day is today? I don't even know. It is, it's Wednesday. Not looking good, man. Not looking good. I can't wait for Sunday, of course. She'll be back soon. Right? She'll see that I haven't eaten. I've lost weight. Right? How sad do I have to make it? I don't know. But today was a very interesting day. I think today offered a lot of opportunities, and we were able to capitalize on all those opportunities utilizing the data. Right? We talked about today the delta flush, right? The reversal. We talked about not going against the gamma. That was early on in the day, right? Going long and buying calls. Those are the first two trades that we took today. And then later on, we saw Jimmy capitalize on the short. I also took a 5.95 SPY put. Just made a little bit of a human error. Didn't realize to set up a bracket order. That one closed at, 10% or something like that. That's okay. It is what it is. Green is green. But we're happy to participate, right? So on the top right here, this is what we saw. This is today's price action. If I actually change this to a 5 minute, maybe not so crazy in a 1 minute, you can see, early on in the day, went up, and then we started to struggle a little bit in some of these pothole scenarios. And then from looking at the delta, we saw that someone was super short 6,000, someone was super short 60.50. And then that kind of just led into a full-on delta contraction. From the opposite end, though, usually we'll see, we've experienced it in some of the recordings now, where we had delta contraction going from negative into positive. Today we saw from positive into negative, and then we just saw a complete flush in price. Funny enough, it happened just as President Trump was speaking today at the cabinet, answering some questions. But that it just tells us that someone knew something, right? It was very clear that whoever was short, they knew something was going on. And so when that short happened, absolute flush. And today we also had the anticipation of NVIDIA earnings. NVIDIA earnings are what right now? I think they're pretty flat. I'm not looking forward to that. Let's see. How flat is it? Yeah, it's pretty flat. That's not very good. Let's see. Yeah, not the best. It is what it is. But that's okay. Let's take a look forward first. Let's recap, not recap. Let's look through what we should be looking forward to. Aside from earnings, we do have we're full on in terms of 3-star events. Let me show you. So Thursday, February 27th. Durable goods. This happens pre-market. GDP, initial jobless claims. These are all really important factors for the market. But good thing they happen pre-market. Hopefully you guys know what to do with big pre-market news now. If there is a large areas where price traveled across, it's good to mark the top and then mark the bottom and then mark the 50% zone of those events for the following day and see if those levels are respected at all. See if we can use them as targets for price. Intraday, there isn't really anything. We have a little bit of FOMC members speaking, but as of late, I've noticed that FOMC members speaking, they don't really do a whole lot. It's really just the reactions from Trump in particular. Like literally just Trump speaking is going to be the deciding factor for a lot of the moves in price. Friday, I think this one's going to be even more important. We're going to have a core PCE, so that happens pre-market. And then afterwards, right after that, we have Chicago PMI. That happens intraday, so the first 15 minutes of the market session. And from there, we'll have what we call digestion. I think this. I know a lot of people on Twitter are speculating if this is actually going to pivot price for a long time, like put us into a really short-term bearish sentiment. Looking at the data right now, it almost seems as though we're starting to prepare for it. We're getting a lot of delta moves, though. We can see that March 21st continues to go from positive to negative. See if we can load this here a little bit. I know yesterday was very positive, which is not ideal. It just means that there's a lot of indecision in the market. But the fact that long delta still kind of surpassed just a little bit further out in time, anyways. Like this is an overwhelming amount of long deltas. But we'll speculate this a little later. Let's zoom this back, put it on the play button. So yeah, that's what we're looking forward to. I think there's a lot of opportunities. Do we get another opportunity like today where we were able to take advantage of both sides? Quite possibly. So show of hands in the chat who actually benefited from today's price action, going long and then going short after. Who ended up green? CKs, I think it was the reaction to Trump confirming 25% on EU. Yeah, it could be. It's a lot of speculation. I think following the news sometimes gets us a little into that, like overanalyzing things. Just stick to. I mean, intraday, if we're looking for cash flow, just stick to what we're looking for. Then look for deltas. If everyone's long, do the same thing. Be long as well. If everyone's short, do the same thing. Go back into the shorts. Cool. So it looks like some of you guys took advantage of today's price action. So I'll show you what we looked like right at the open. So the reason why we went long, and again, we didn't actually capitalize on that much being long either. It was very short lived. The short was a better trade. But let me go back to the morning. This is what we look like in the morning. You can see for yourself. When we imagine this as an army, right? Here's your let's go to 7:30 actually. I think that was a little better outlook. 7:30. So we climbed up just a little bit, right? We were looking for a potential that this delta zone on the bottom right was going to flip it forward, right? So we were betting on a delta contraction and delta expansion to the upside, because overall we were seeing like, okay, if we're looking at this in terms of support and resistance, right? That's how we're supposed to look at delta. That's how we utilize deltas. We can see that there's a fair bit of support, right? You got 600 million, and you have like 200, 300. Overall, like this area here was green. What wasn't very green was whoever was being a short at 6,000, 60.25, and then like upwards from there. So we did have a little bit of a disagreement between gamma and delta. Now, how are we supposed to use this stuff? So remember, delta, we're supposed to use it as a support and resistance, right? So we can see that here on the right side. You can see a little bit of a mess here. Gamma, we're supposed to use the highest point, the mountain, right? The peak of the mountain, as our target for price. So we're seeing 60.30. So we're all betting on like, okay, 60.30 might come to fruition. At some point, when we got to 60.08 on price, right around like here, I think we hit like high of what, 60, oh yeah, 60.09, almost 60.10. That was like the most that we saw, and that was around like 8.10. Kind of almost had to give up on the position. So I'll show you at what point 810. That's your highest point, right? And we continue to see 6,000 delta just be that bad iPad kid at the table, right? That's my example that I'm using here. You guys know when you're having like a family dinner and you have this one kid with the iPad that won't shut up unless you give him an iPad. That's 6,000 price today, right? Continued to argue, didn't want to fall through. And then at this point, when we struggled so much, you can actually see the data flip. So it was around like London, sorry, not around London close. It was around like, let me refresh this real quick. I think like during the middle of like New York City lunch. Yeah, just about. You can see like 9:30. New York City lunch. Look at the deltas. This is what's happened. So you can see here on gamma side, things start to really flush. And if I continue to zoom this minute by minute, you can see for yourself what's happening to 6,000. And to all the surrounding strikes around 6,000 too. So going forward in time, minute by minute, some point, we actually get an insane flush. So around 950. So that's like right here. So at this point, sorry, it's actually better viewed here. At this point, like there's no saving. There is no saving the market because everyone around us has now become super short. Now, I was saying that 6,000 was the clue today. The fact that 6,000 refused to flip, and then the fact that 6050 never contracted as well. Here's the other one, right? So what does it mean to be short delta? Who knows in the chat? What does short delta kind of represent? I'll just answer for you guys, make it a little bit quicker. So short deltas is either in the money puts, long, or short calls. So what does it mean to be a short call? When you're short 60-50, it means that's your ceiling, right? The dealers have called a ceiling at the top. This is where price cannot surpass. Otherwise, they have to roll the positions. Or they have to do something drastic to make sure price doesn't close above 60-50, right? They need 60-50 to expire worthless. That's their goal, right? In terms of short calls. And then the same thing in the money puts, right? They want price to close below it. So we saw this the moment. I mean, if I continue to go forward, you can see 6,000 now all of a sudden is like 3 billion in negative exposure. It actually surpassed 60-50. So this was that forced flush right here. This is 10. This is right after New York City lunch, right? Now you can also see the targets for price change as well. Where is the new target, right? It's all downside. 59.50, right? This is 10. That gives us another like 20-ish points, just about, to get to the new target for price. You guys see this? Right now, it went against. Did it truly go against the 0 DTEs being purchased? I actually wouldn't say so, because if you can see here this line on net drift, right? This was the other one that people were pointing to. Oh, there's no convergence, like that. That's not showing us something. It doesn't have to, right? Remember the main goal of us using a data-driven approach is to look for clues. What was the clue today that led us to the flush, right? If you just focus on net drift, you're gonna miss things. That's 100% true. You need to have things in like together, right? You look at multiple tools and you look at them together to see the grand picture of things. So the grand picture was that, hey, everyone kind of gave up on these longs. You can see it right here. Who is short on the delta side? Nobody. Nobody's short here. Targets for price have also flipped. It's all gamma now. Like gamma, it's all negative gamma here, right? But even on net drift, are we seeing, like right here at this peak, right? So you can see here on the bottom, it's showing us that calls from the open have been picked up way more than puts, right? But at this point, at like 8:30, what happens to this line down here? It actually stops growing, right? It stops growing, and all of a sudden, we're getting 0 DT puts kind of start to rise up, right? So it may have not converged, but we still did see at the top here, they did stop buying calls, right? Maybe it didn't converge because it was just too much, right? In premium or not enough. That doesn't matter though, right? We still see puts surpassed a little bit, like it starts to grow here. And so that's what we're seeing. That was how we caught the flush intraday. It was a really good trade day. I mean, I ended up green. I've been on like a 3-day lose streak. But yeah, I'm happy to be green. Hopefully you guys are green too, and hopefully you guys are seeing, well, yeah, how we're using this to trade, because, you know, there wasn't a whole, I mean, if you look at a chart, right? Let's say you go to a chart and you try to predict price this way. Like, by all means, you know, if you can do it. For me, I just need a little bit more to tell me that, yeah, we're like a database approach, that, okay, everyone is actually long here, everyone's actually short. I don't know here, right? This is great to tell you where price has been, and for targets for price and areas of interest, but do we know we're going to get to an area of interest? That's where the deltas and the gammas and the Vanna and net drift and all these two other tools come to play to tell us, yeah, we're actually going long, or puts are valuable here, right? That's it. Kind of all I have. This was the recap today. And just a few questions for you guys. Let's see here. Today's data showed the flush, but is it unusual for the data to stay red even though the market is moving up? After bottoming out today at 59.30, price slowly climbed up, but the data was still bearish all the way. It's a good question. I'd say that every day is a little bit different. But that flush by the end, like, we've already moved on. We've already had like so many hours of the New York session, right? If you wanted to look further, like, you could actually start looking into the following day's data and see if there was any sort of buyback like that. Because we know dealers, they don't really operate in zero DTEs. The whole moving of zero DTEs is more so managed by market participants, and then dealers try to get out of the way of 0 days. They don't work like this. But it still would have said that every long was a better value short. You're gonna have to manage your own rules, your own trading style based on that. I know that I have a set of rules where I say, like, I will never inverse the gamma. That's just helped me manage my own risk. But if you wanted to catch this last of day pivot, you might need to be a little bit more technical. You know, you could use like the Heikin-Ashi count that's purely on the charts. Heikin-Ashi 4 count, right? I know that's a very popular trade style. But yeah, I mean, at some point we met that 59.50. Let's see when we actually met. We met 59.38 at 11. And you can kind of see that 59.25 started to peek its head. But you do also have to gauge, like, you have 2 hours left. Everyone's already going to be dealing in the monies or following DTEs if you're still trying to look for a trade. And by 11, you wouldn't want to be trading options anyways. But yeah, that's what we got. Hey, no problem, sorry. I know that wasn't the best answer. But it's it also, like, that, those kind of questions just end up being more so like a risk management question. So keep working, keep journaling, keep seeing how you want to do things. We're trying to look for clues for that move up. Yeah, no, there's got to be other clues. But I know that this flip was one of the greatest clues today. So, ABJ, did you ever backtest your 0 DT with quantity and edge? If so, how have you done in the past year or so? Backtesting and journaling is something I talk about a lot. You know, we definitely want to be in the realm of journaling at least every day. If you can't, one day, you know, make sure it's fresh. I think I've shown some of my results before with that 82% win rate. 55% of it is for directional, so I'm not that great directional, but spreads, if I incorporate spreads, it actually brings my win rate all the way up to 82%. In terms of backtesting just the 0 days, haven't really boiled it down just to 0 days, but I can say that it's not like a large sum of my portfolio. Like if I only traded 0 days, that wouldn't really be a good idea. You're not going to get like take advantage of these overnight moves or the general trend. Would never be able to take vacation, right? That'd kind of suck. If you want, I can start going back in my journal and actually dig up some math for you. That might be an interesting one. I will do it. I'll do it. Not today. Maybe on the weekend. I'll go back over to like last year's, and then. But the other thing is, for 0 days, I wouldn't be able to incorporate futures data. I'd have to manually do that. But let's do it from the option side. I'll do it from the option side for you. How did you see the inverse this morning, afternoon? Did you see delta moving up before gamma or vice versa? I also noticed you aren't using charm vanna in your information gathering. Is there a reason for this? Yeah, so I can actually go over for you guys the difference between gamma, delta, and vanna. That actually leads us into a really good session here. So how did you see the inverse this morning? Well, this morning was just all bullish. I'll show you right here. 7:30 is the morning, right? Because we skipped the first hour. But generally, I was betting on the fact that we might see 6,000 contract. We were already in a bullish scenario for gamma, so targets were upside. You know that I never fade the gamma, right? If gamma's pointing upwards, I'm going to try my best to follow along with it. Look for an entry to go up. If it's pointing downward, same thing. The one bet that I was making that was early was betting on delta flipping alongside it, right? If you actually look at vanna too, I'll show you what vanna looks like. It's a really good question though, Bob Noxious, because it actually leads me to the other fact that I think maybe a little bit of homework for some of you guys. A lot of you guys are asking me Greek-related questions. I've been giving out the homework, and then I feel like some people aren't actually doing it. But if you are, then I don't want to be the liar. Be like, oh, you're not actually doing the homework. So this is what vanna looked like as well. So we did have vanna on our side as well. Vanna is the third variable, right? From our studies, we know that vanna in the morning has the most strength, right? Who remembers this? Who remembers this this fact that we have? Me. There you go. So this is our little drawing. This is my NFT, right? Gex Vex weight from time to close. So as we understand, vanna holds a little bit more magnetization effect in the morning as opposed to gamma. And then right around London close, so 8:30 a.m. around London close, it actually shifts in terms of gamma holding more weight over vanna. Now why is that? It's because we know volatility as time comes to a close, it dwindles to nothing, right? Whereas gamma can actually go to infinite because of the fact that contracts can become in the money, and gamma directly affects the premium of delta, right? So that's our little study here, our little interpretation. And so when we're looking at the vanna in the morning, we had vanna and gamma on our side. Delta was the only one that wasn't. Now you're asking about charm, right? Charm is better used to be looked at on a longer time frame, because we know that the closer time comes to zero, charm and vanna actually both become volatility directly, right? So if you did the homework, if you guys did the homework on Tasty Trade Options Crash Course, you'll see from our understanding of charm, it's not that useful if you look at it on a shorter time frame. So I'll show you right now. So if you look at right here at 7:30 a.m., I might as well, I'll just change the left side to charm. You can see how closely it looks. It's just inverted, right? But the inversion is actually good because the negative is good for us. But you can see that it looks exactly the same. And that's because of the fact that there's only 1 day left, right? What is charm? Charm is the decay of delta over the passage of time. And as time comes to nothing, there's less room to work with, and so it becomes volatility. Right? Hopefully that understands. Hopefully you understand what I'm saying there. So that's why we don't really use charm that. We use charm to swing. It's great to use charm to pick positions to swing. But we're not going to go over that today. It's going to be a long session. But yeah, so I'm going to show you, right, our base look on what this, well, what the Greeks mean, right? How do we use the Greeks? Now, some of you guys, this might be, you might have seen this before. This is my interpretation of it. It's my way to kind of make things a little bit more, it makes it easier to understand a little bit, right? I'm going to see if I can use this drawing pad. Let's see. Let's see if this works. Oh, I still need a lot more practice with that. Yeah, I'll practice another day. I'll draw you some art later. But okay, I'm going to show you guys right now. So the three main things, okay? Paint, notepad. Right now. Sometimes I go over this stuff and people are like, oh, ABJ, you're so smart, man. Where'd you learn this stuff? You're a quant? Did you go to math class? No, man. No, just a regular guy with a high school degree. So, delta, support, and resistance, right? Gamma is your targets for price. Targets for price. Vanna is your secondary momentum indicator. Right? The ABJ trifecta is all three of these buy-side Greeks pointing in the same direction. Why do I type so terrible? In the same direction. Okay? So what is the ABJ trifecta? It's the one strategy out of my playbook that I use to actually put on really confident trades, right? Plenty of times we've seen the trifecta to the upside where, you know, right at the open, I'm like, okay, today's a trend day. We're just going to sell crazy puts, like from the open, and then we're going to start buying calls, right? Sell puts, buy calls. That's like the main thing that you guys have seen me have these crazy runs in the market, especially last year, especially during November 6th, right? If we go back to November 6th on SPX, you can actually see that we had an insane time. I might not even be able to go back this far. Oh, I can. November 6th is right here. Yeah, so ABJ trifecta happened here for like 2 days straight, where this gap was created, right? Trump won, and then everyone was like, "Oh, we gotta short this gap. You know, this gap is juicy, a fair value gap." And I was like, "No, man. Everyone and their grandma is long, right?" So that's what we're looking for up here. And to interpret this a little bit, if you were to imagine the Greeks in this way, it might actually help you, right? So this is going to be delta. This is going to be gamma. And then this is going to be Vanna. Okay? So we visualize delta as like the engine. Okay? And this is going to go directly to our trifecta strategy, okay? So follow along and let me know if I'm going too fast, but this is delta, and we imagine it looking like this, okay? Brownie points for whoever can guess what the hell I'm drawing before I write out what it actually is. Okay, this is the engine. So it's supposed to be a V6, but anyways. So if you imagine a little car, Imagine a little car, a little Fiat. Okay? I don't know who here drives a Fiat. I don't know why you would. But if you imagine a little Fiat and you put your foot all the way on the gas pedal, what happens? Your Fiat has like nothing. It's like base model, 120 horsepower, and all you do is just put your foot on the gas. Right? What do you expect to happen? Right? No, it doesn't break. What do you expect to happen? Well, when it's just a little peppy 120, right? You expect acceleration to just go like this, right? One straight line, nothing crazy, right? You're just gonna go forward, right? Right. So that's our base, right? We need delta. We need the engine to be in line. So let's say we want the engine to go forward, okay? Gamma. This is what the gamma is. So it goes like this. Right, this is your turbo. Honey bun? Oh, brother. So that's your turbo, okay? Now let's imagine. Let's imagine you have that little Fiat, 120 horsepower, okay? And now all of a sudden you slap a turbo in it. Okay, so what do you expect to happen now when you put your foot all the way down on the gas of this little Fiat? What happens? A huge boost, right? At some point, right? At some point in the RPM range, right? You can clearly tell I'm not a car guy, but like at some point in the RPM range, it goes like this, right? This is where your turbo kicks in. Right? At some point, you're gonna see value, or like your car just go really fast. And I'll talk about like how this represents itself out of the money and in the money. Okay? So there you go. And Vanna is your variable. Right? Vanna is your variable. And this is why I prefer the trifecta in terms of trading. Okay? This is your variable. Right? Now, some of you guys might not believe in this variable. Some of you guys might think like, oh, this doesn't make sense. But I swear to God, this is going to make a lot of sense now to you when you look at the Greeks this way. Okay, now, so here's your third variable. All right, let's say you have your little Fiat, right, that has a turbo now, and you driving your wife. Okay, now all of a sudden your wife says, hey, I need to pee. So you need to go faster. What happens? Right, I know this is like a joke analogy, but this is actually pretty good. Like this actually tells, for any married guy, they'll understand this. Right? So all of a sudden, right, we have the gamma kick in, and then we have the wife power kick in. Gamma, wife. Right? Vanna is the direct correlation to Vega, which is the direct correlation to IV, right? To volatility. Now you have gamma expanding price and you have volatility expanding price of your premium. Right? So all of a sudden your Fiat with that turbo also has wife power now, which adds another 50 horsepower to your car. Does that make sense? Right? So when we look at the trifecta, when we look at price, so it can be like this, okay? I'm just going to quickly draw it for you really quick. And then we'll have deltas. We'll have Vanna. We'll get some red here. A little bit of red in the front because it's supposed to be seen as support, right? This is where price is. Okay, this is where price is. This is where price is. And so we have gamma, delta, Vanna. Where are we going? Where are we going, guys? What does this show us? It shows us that everyone and their grandmother is long, right? So when you look at the Greeks in this way, we can see that it's more beneficial for you to look for a long entry than for you to bet against the trend. I know a lot of traders in the 6 years that I've been doing this. A lot of traders that are very successful are the ones that catch the move as it's going, right? They ride the wave as it's going versus them catching some sort of pivot. It's nice to bottom tick things. It's nice to top tick things and then catch the reversal all the way down, right? But are we hero traders in the end, or are we retail traders looking to get paid, right? In this view right here, we can see that the general sentiment of the market, the value in the market, is upside. Now, looking even further than this, right? If you guys understand what we're talking about here, delta, gamma, and Vanna being your wife, you can see that delta, right, is in the middle picture here. It's showing us all the support, right? Everyone up below us is long deltas. It's going to show us that it'll take a lot of force for the market to force this to come into the red, right? And if we look back on quant data for today, going to 10, look at the deltas for today. As soon as we start to pivot, right? We can see that it will take a lot of force for this to become support again. This is now all resistance, right? Same thing here on the left side. If we go to 10, targets for price have changed now, right? So we are all looking at the same data, right? We all saw this, right? We saw that the open was a little bit bullish, but in the end, 60-50, whoever was short here did not want to give it up. You can see right here, right? This was like that. I kind of imagine this is like 300. You know, you guys watch that movie 300? One of the best movies of all time. Not because of the naked sweaty men, because it was cool though. It was very manly, right? You could see that this was like holding us. This 60-50 negative, over 2.8 billion in negative exposure. Right? Whoever's here is super short. And so there's no way we were going to surpass 60-50. Now, but looking at the data here from the morning, I thought that why I went long was that, okay, there's probably no way we're getting to 60-50, but there might be a chance that we get to 60-30. If the target for price is upside, maybe we get some sort of reversion and then a steep pullback as soon as 60-50 comes close. Whoever's short there is going to be like, okay, yeah, no, screw you guys. We're definitely like, I'm going to force price to come back down. And so that's what we saw today. And so when you look at it in relation to this, you can see at all times which side is more valuable for the retail trader to take advantage of. Right? And we're looking at this as well. Right? Now, sometimes there's questions in terms of options as to like why I only deal in out of the money options. Right? What's your first guess as to why we only trade out of the money options? For those in the chat. I gotta get better at drawing on paint because I use this damn thing so much. Drink some water here. Ooh, I'm gonna eat with my mom today. Let's see. Let's see if where she's taking me out for dinner. It's a few things, right? It is better risk to reward, right? Because it is cheaper to start when you buy in the money contracts. I'm going to give you guys a few scenarios, first of all. I'll give you guys a few scenarios. It actually happened to one of the traders in the chat not that long ago. They were trying to battle me on like, I don't know if you guys saw the conversation, but they were trying to battle me on the fact that buying in the money is better because you get paid more. Maybe they do. But what's the one truth about options that we know? There's one singular truth, and this is why sell side is so great. Like selling spreads. Time is your enemy. No, that's not true. Depends on how you deal in options. The one truth about options is all out of the money options decay to nothing. Expire worthless. Yeah, okay, there is another truth, I guess. Puts do pay more. Puts always pay more than calls. That's the fact. Factual. But that's not what I was referring to. I was referring to the fact that all out of the money options decay to zero. And so what happens when you buy an in-the-money contract and it goes against you? And then all of a sudden it has become out of the money from being in the money. Does that hurt? I bet you it does. I know it does. That would really hurt, right? So, this is the premium curve. We understand that based on what we see here, gamma, right? It's showing a peak value. Why do we call gamma the top of the candles of gamma, the MVC, the most valuable contract? That term is a term I created here in quant because from our studies on the Greeks and the math, that contract with the most gamma exposure is actually the one to pay you the most. Okay, so let's do some really quick math before I go through this. If we do some quick math, we're going to do quick math here. Okay, let's say SPY is trading at 500 and SPY call 505 is worth, I don't know, let's say $1. Just make it easy. Okay, delta is 0.2. Gamma is 0.1. Okay, what is the price of the contract when SPY hits 501? Right, it's 1.2. That's right. That's right, 100%. What is the new delta? .25. What? It's 0.3. Right? We're doing quick math here. I'm not even going to do the rest of the math. But you can see that as price continues to go on, which one actually pays more? Which one is actually the true mover for the premium? Is it delta or is it gamma? It's gamma. Right? Gamma's that accelerant. It's the turbo. Right? When we go back to this, do you guys understand now? Like this linear move is just delta. When we get this explosive bloom in price, it's actually the work of gamma. Right? So going back here, let me minimize this guy. Right? When you start to deal in out of the money options, when you're buying out of the money, you're buying here. So you're buying the contract at a profitable spot where your risk and reward is better catered because it's cheaper. And you have this potential of this bloom in premium, right? This is delta trucking along. At this point, let's say it meets in the money. Now your contract is here. So if you buy in the money, this is actually what you're doing. You're buying at the top of the contract value. You're buying at the top, right? You're effectively, you can kind of view it as like you're almost overpaying, especially if you're looking to trade it. I see people who trade in like deep in the money contracts. They don't offload those though, right? If when you're dealing in deep in the money contracts, it almost acts as shares, and it's actually more beneficial for you to exercise the rights to those contracts, right? For us traders, retail traders around, are we looking to do that? I would assume most people aren't. I'm definitely not looking to do that, right? How would you handle contracts that are 0 TTE for SPY? What do you mean? Today I picked up 595 puts. That was out of the money at the time, before the flush. And we saw that from, well, yeah, the open. So what do you... Yes, but how does theta play? Well, we understand that theta stops when your contracts become in the money, right? So I have a rule of thumb. This is how I counter the theta thing, right? So I mean, there's a lot of information to go through all the time, but when I sell, I'm generally trying to sell 2 to 4 strikes away from the areas of interest. So let's say absolute bottom today, for example, was like 59.30, right? If we saw 59.20 as a realm of possibility, I would look to sell 5900, just to give me that little extra protection room and add to my probabilities, my probabilistic nature of those expiring worthless, right? Because we're going even further than where price has any interest in going. When I'm buying contracts, let's say SPX maximum MVC is 60.50 today. Right, I'm just making up numbers. I would want to buy like 60.30 if I could. And that helps me in terms of theta, exactly what your question is. Because when my contract becomes in the money, it now has intrinsic value. Theta has less of effect on my position. Right? Hopefully that helps. That's just my rule of thumb. You can find whatever works for you. That's what I found that helps me a lot. So yeah. Oh, okay. Perfect combo. I'm not going to share that one. Thanks for that share, though, Freddie. Yeah, I know a lot of information to unpack, especially for those of you that are just starting to go into a data-driven approach to trading. You know, I know a lot of you guys haven't found success in like chart patterns and, you know, bull flags. I think bear flags and whatever else, head and shoulders, right? Those are all great ideas, right? Here's my last bit for you guys, because I know there's so many of you guys that are brand new, and I really you guys can tell, like, I live and breathe this stuff. Over the 6 years that I've been like actively trading, this stuff like has really changed my financial journey around as well. Living in Vancouver is not very easy, but here's my last bit, and I think this is going to be really important for some of you guys that are brand new, right? I'm going to open another paint. Yeah, I'm going to have to save some of these photos. So, everyone knows this pattern, I'm sure, right? What is this? So what is this? A flag. Sure. I was trying to draw a bullish wedge. So, okay, this is a bullish wedge of some sort, okay? Now, what is supposed to happen at the end of it? At the end of this consolidation pattern, right? Boom. Sure, it's supposed to go up, right? So, me saying that already tells you that you're already looking for data that's outside of this to tell you that it goes up. Because what needs to happen in order for this to go up? Buyers, right? Buyers need to step in at some point at a high level, high volume for price to skyrocket, right? Supposedly, right? So what is stopping from price from just doing this? And just fizzling out forever. Interest, yeah. The answer, it's nothing. Nothing's stopping price from just doing this. Okay, so when we look at the market with a data approach, we already know that all this tells us is where price is, what price is doing and what price has been. There's no way that a candle and a chart pattern can tell you where price is going to go, right? There might be really good ideas, right? But if you want to know for sure, what other data source are you looking at then? Like, what's a better data source? Would it help you to see who's actually long and who's short, right? I've been talking about this with, I know some market's been dipping a little bit, but the doomers on Twitter, they keep saying all these things. Oh, like, there's a wedge and a fair value gap and all this. And, you know, I think there's one true metric in the market, and that's who's actually long and who's actually short. Who's actually long deltas, who's actually short deltas. Where is the interest in the market, right? Here's another one for you, okay? We're going to do, because Bob Noxious is here, we're going to do Bob. All right, we're going to do Blossom, because she's a nice person. Blossom. And then, who do we want to pick on today? Let's go for J6. J6, okay? So Bob sees the chart, and he draws this. He's like, oh yeah, this is a bullish wedge. We gonna fly to the sky. Okay, Blossom sees head and shoulders, and she's like, yo, this is it's making a clear pattern here, and we gonna drop as soon as we hit this shoulder line here, right? This trend line, right? And then J6 draws a dragon. That is not a dragon. He draws this like slippery dragon, right? Okay, and then I go into the market and I draw the same head and shoulder, same bullish wedge, but from somewhere else. So it looks like this. Who's right? Me? The truth is, nobody knows, okay? Because all these drawings and all these lines, you could start from this other pinpoint, you could start from another bottom, right? This is what we call subjective data. Okay, this is what we call subjective data. Now, what if I showed them that 30 minutes before FOMC, someone bought 600 million in naked calls? What would we all come to the same? What would we all say? What's the conclusion? What would we say if I showed y'all that on net drift on February 12th, not a single person bought puts? What would we all say? Would we throw our chart patterns, like would we throw this away? Would we just forget this? Probably, right? So this is actually why I don't use charts, patterns, and any of these things. They're a great subjective idea. Okay, but the truth is, if we look at the truth of the market, which is who's actually participating in the market, like let's go back. Let's go back to February 12th. Okay, this is what February 12th looks like. Let's go to 8:30. London close. Let's go here, February 12th. That London close just about crazy right now. Yeah, you can actually see that everyone in the grandmother is long, right? Delta's maybe not so much. I think this was the day that we actually pivoted. If we go to the 13th, there's actually a little bit of a better view. Oh yeah, there you go. This was like a much clearer view. And then 13. Right, and so this is my clear example, right? And the FOMC example that I gave you guys, that actually happened. March 20th of 2024 was one of the greatest days that we've had here in the quant data team. I remember it very clearly because that was a killer day. We actually had contracts go from, I think like 80 cents to 30 bucks. I can't remember anymore. 80 cents to $17, not $30, like $17. That was a crazy day. And that was because FOMC, literally one guy started to buy all these calls into the FOMC event. They bought a single order of like $600 million SPX calls. I can tell you, when we saw that, everyone threw their chart patterns away. There was nothing stopping price from going up. Right? If you want to go back on your brokerage, go back to March 20th, FOMC, last year. Right? And so you can, this is not to say that there's like one way to trade, like this is the only way. This is to say that there's other ideas, right? If you're great at capturing the market with these subjective ideas, like keep doing it, right? You're paying your own bills. I'm not paying your bills. I don't care if you're green. If you can honestly tell yourself that you're green looking at data this way, this is not data, but looking at the charts this way, great, you know? But for me, and for those of us who didn't find the success that we wanted, studying charts and candles, trying to interpret what price is going to do in the future based on what price is done, welcome to a data-driven approach, right? I think there's a lot of information that everyone can take advantage of. I think there's a lot of resources now in 2024, 2025, 2023 even, right? Back then, when was when people started to really focus on Gamma and the Greeks and how much they actually control the market. But yeah, that's kind of how I did it. That's how I do it. And so when I look at charts, I think you guys know that all I do is I just draw levels, points of interest in the chart. That's it. Highs, lows, previous highs, lows, 50% zones, and I only use them as targets for price. Areas where I'd like to trim, areas where I'd like to sell. That's it. So yeah, hopefully this was good. Went through a lot of information today. I tried my best because I see a lot of people in the chat are brand new, and I think when I go over the market this way, it actually gets people to be like, oh yeah, okay, there's actually a real way to navigate the market, right? I don't know. I'll also say that for most of you guys who are brand new, who've only been joining in the streams recently, I know I've been on like a 3-day lose streak. Today was the first day I got back into the green. I do pretty well most days, but I'm also not a scalper. So I know some of you guys are scalpers. I don't believe in scalping. I think this is actually the last little tidbit that I have. I think if you're not confident in a position for longer than 15 minutes, it's probably not the best idea for you to enter and put on a bunch of risk, right? I'm very patient. I like to take trades that I'm very confident in, and that's kind of like me looking at the data to point me to say like, okay, this is actually a high probability of success when the data points to this way, right? I've talked about how I structure my portfolio, 80-20, the dealer structure, right, where 80% of my port dedicated towards collecting credit, 20% dedicated towards debiting, and I only spend on debits when I've collected enough credit, right? So let's say I collect $500 of credit. Now I have $500 to spend, but I'll make sure I spend less than that. I'll spend like $250. $250 of the credit, so I still grow my portfolio in some type of way, so I can like buffer losses if anything. But yeah, we'll go over that next time. Maybe we can go over the 80-20 rule next time. Again, it's that is actually, you can actually Google that. It's not my like something that I made up. It's actually a real dealer structure that they actively use. Maybe in the future I'll actually go full onto it. I don't think I see a reason for that yet, where dealers are generally, we know, are short stock, short put, and long calls. That brings you to some sort of neutrality. I don't really want to do that. We'll see. I've been paid very handsomely by being a bull, so yeah. I know I missed some questions in the chat. I think I went on a little bit of a ramble. But if there are actual questions that I missed that you really need answered, feel free to ping me in the trading floor. I'm always open. My DMs are always open for you too. I just try my best to answer them on like specific days. So like Sundays, Wednesdays and Sundays is when I answer DMs. Don't feel bad if like you message me on Monday and then I like don't answer you. It's just, I just have a lot. I usually have like a lot of resting DMs, and I don't even want to. Because if I start answering one person, I get into the habit of answering everyone, and then Carmen gets mad at me because I'm not watching her K-dramas with her, you know what I mean? And I want to know what happens in these K-dramas too, you know, because they're super addicting. Yeah, that's it. That's all I got. I'm going to go ahead and cut the recording here.